So now I'm going to talk about the offer and compromise. Hopefully, before watching this video, you've watched my other two videos, the free consultation and what to expect, and the video on the statute of limitation analysis and the collection statute expiration date. But if you haven't, that's okay. So before I get into talking about the offer and compromise, I just want to make a quick disclosure like I do in all my videos. No two taxpayers have the same tax problems. Rarely have I seen that occur, so realize I'm just giving you generalized information with the design for you to reach out and take advantage of the free consultation and speak to me about what your individual problem is. That being said, the offer and compromise is just how it sounds. You're submitting an offer to the IRS to reduce a tax liability. So, to be able to submit an offer and compromise, you first have to have a tax liability, which happens one of several ways. You went through an audit and the IRS made a ruling against you and sent a determination letter out to you. You haven't filed tax returns. The IRS submitted substitute for returns for you, made their own determination on what taxes you would owe, and sent that to you. Okay? Or you filed your own taxes and you just didn't have the ability to pay at that particular moment. Okay, these are generally how somebody ends up with a tax liability that meets that first element to submit for the offer and compromise to the IRS. So now with the IRS offer and compromise, it basically breaks up into two sections, and then you have subsections within those two sections. Section 1 deals with the doubt as to collectability aspect of it. Section 2 essentially deals with the doubt as to liability aspect of it. The doubt as to liability aspect of it is a lot easier to deal with and is much more straightforward than the doubt as to collectability part. And most of the time, most everyone is going to fall more into the doubt as to collectability part of it versus the doubt as to liability part of it. Now, there is a third aspect, which is extraordinary circumstances, which then plays into the doubt as to collectability aspect, but it can also play into the doubt as to liability aspect as well. So when you go into each one of these forms, basically you're going to have a set of extraordinary circumstances that can come into play, whether it be doubt as to collectability or doubt as to liability. For this, I'm going to concentrate more on the doubt as to collectability, and I will briefly touch on the doubt as to liability. Okay. Now, before I do that, realize that there is going to be criteria with this. Okay. And the criteria first starts out when you file this form is that they want you to have all your back taxes filed. So if you haven't filed all your back taxes, don't even bother submitting this form, because what's going to happen is essentially, as that's the first criteria, they are basically going to take whatever that initial 20% lump sum offer is and your fee and your form. They're going to keep the 20% lump sum offer. They're going to return your fee to you and the offer and compromise form, and then with a little letter that says, once you've filed and been up to date on all your tax returns, then we'll address an offer and compromise. So again, realize there is criteria just to even file this form, okay? And there's going to be criteria at the end of it, which I'll talk a little bit more about after I get into discussing the doubt as to collectability. So with the doubt as to collectability aspect, which is where most people are going to fall in, okay, you basically have doubt as to collectability, okay? And that can come from different aspects of things. There could be, could be an economic hardship, could be could be medical reasons that could come up as to doubt as to collectability. It could be several things. But you also have an aspect in the doubt as to collectability that deals with tax administration. And within the doubt as to collectability, the aspect that deals with tax administration breaks out into two provisions essentially. Okay, so if you're not fitting the doubt as to collectability as a general rule, you can then look at these effective tax administration rules. One of them being economic hardships, the second being administration of public policy and inequities. Okay, so it's possible that, if the general rule of Dallas to collectability doesn't fit you, that these subsections that deal with effective tax administration, with economic hardship, and then public policy and inequities, okay, could then fit it a little better. The point I'm trying to make to you is that there's a couple of nuances with the doubt as to collectability that you need to be aware of, okay? So with the effective tax administration, the economic hardship, okay, this one is a pretty kind of straightforward situation, and this also falls into just the general doubt as to collectability. So the example I'm going to give you, let's say that you have a family member that's within your household that is ill, whether that be some type of terminal sickness or generalized long-term care situation, where you have the assets to pay whatever the liability is, but you really need that money to take care of that family member. This could also be yourself as well. If you yourself are sick and fit the same situation, okay, then everything I'm about to say would be you too, okay? So if that family member, if you paying the IRS meant that that family member could not get medication, could not pay insurance premiums, could not get like home health aids, things that they would need to either live or be able to live at a what would be a fair and comfortable level, then the IRS has to look at that economic hardship that serves on you, okay? Now, realize the IRS is going to want you to prove these things, okay? Now, I've given you an example that's relatively easy to prove, but I'm going to talk about more proving this towards the end of the video because there is documentation that's going to come up with this, okay? So, in this effective tax administration scenario, okay, essentially, you can argue different types of economic hardship, okay? One of them could be a job loss. That could also be in the general collection thing that you could argue a job loss. One of the things that you could argue just in the general doubt as the collectability aspect is the loss of a job. Okay, and instead of arguing under effective tax administration economic hardship, you could argue it under just the general doubt as the collectability rule and argue for a status of currently not collectible. Let's say that, at the time that you had this tax liability can't come up, you had a job, but then you've since been terminated since then, and now you don't have a job, okay? You could look at that doubt as the collectability situation and then ask them to, essentially look at a currently not collectible status. It could be a temporary situation. When I say temporary, it could be a year, it could be 6 months, could be a little longer than that, okay? There are certain situations where the currently not collectible, if you have a terminal illness, that might be to the duration, okay? My point being is that under the doubt as to collectible, whether it's the general rule or the A and B section of the effective tax administration, whether that's economic hardship or the public policy or inequities rule, okay, you have to really look at, determine which one fits you the best. And this is where no two taxpayer situation is really the same, okay? Now, I'm just going to quickly touch on the doubt as to collectability, okay? Because the doubt as collectability, the doubt as to liability rule, okay? The doubt as to liability rule is a much more simpler rule, okay? And essentially, you're asking the IRS to basically get rid of the tax debt because you're not legally liable for it. And I'm going to give you the exact situation that the IRS usually, puts out in any type of continuing education or guidance. Okay, many a times, right? A small business owner, will have an outside payroll service that will do their payroll, that will then take care of all the payroll tax deposits, being the Social Security and Medicare match, the food matches, and the state unemployment matches that come up with that. Basically, you pay the payroll provider to do it all for you, okay? So somehow that payroll provider misses making a quarter payment, right? Payroll breaks up into 4 quarters. They miss one of those quarter payments, and all of a sudden you get a tax bill for it. Well, this is where the doubt as to collectability, the doubt as to liability statute starts to come up for you, because you have made all those payments, okay? And you had a contract with them to do that. So there's where within the doubt as to liability setup, you would argue that, you had this outside service doing this. But under the doubt as to liability setup, you could also then argue under that too, the effective tax administration rule, essentially, as to public policy and inequities, because you did contract this outside service, you did make all the payments for that quarter that they missed, and you're a good taxpayer. So, the IRS really would have to look at that and determine, give you time maybe to straighten this out with the payroll service. The payroll service, when I was in public accounting and I was being trained by CPAs and enrolled agents working for Big Four, we used to see this all the time with outside payroll services. So it's not an uncommon thing, okay? So I know this video is pretty long. I'm trying not to bore you as I'm going through this. Remember, these are generalities, okay? So I'm going to quickly try to wrap this up now, okay? So basically, you have the doubt as to collectability, the doubt as to liability. Within those, you have extraordinary circumstances that come up, whether it's for economic hardship or effective tax administration with public policy and inequities, okay? Now, realize, as I said in the beginning, there's criteria. Just because you file an offer and compromise does not mean that the IRS has to accept it, okay? And they could come back with their own set of requests of you. And this is where we could get into somewhat of a little negotiation back and forth, okay? And then if they do accept it, they're going to have their own criteria. Namely, they're going to want you to stay up to date on your tax returns and tax liability, okay? And this is where having somebody represent you, like an enrolled agent like myself, right, shows them that you're committed to getting the problem straightened out and then, moving it forward the right way. So generally, one of the criteria with an offer and compromise is they want you to then, for usually like 5 years, can be shorter, but then for like 5 years, to stay current on that. Now, if you have an enrolled agent that's filing your taxes after that, because I not only want to help solve your tax problem, but I want you to then stay with me so that I keep you on track, okay? The IRS really takes a look at that because that demonstrates to them that you're serious about addressing all this stuff, okay? So realize there's criteria in the beginning, there's criteria in the middle of the offer and compromise, and there's criteria at the end with the offer and compromise, okay? So as long as you, look at some of these general things, right, this is where, again, I'm not going to make any big promises here because no two tax returns are the same. And what it takes to resolve one way with offer and compromise can be completely different with somebody else. Okay, so for me, I don't get into like making these crazy promises of I can do it this way and that way. Okay, because there's no way to do it like that. Okay, and then that gives you, the taxpayer, false hope of things that probably wouldn't really happen. I'm not here to high power sell you on something. I want to get your taxes straight for you, okay? There's not a, you need to make a decision right now, right? I do a free consultation, I do only one of those, but the idea is so that you get comfortable with this, okay? And you feel comfortable at actually resolving your tax problem. Now, finally, before I close this video out, when you file an offer and compromise, this is not an overnight thing, okay? Usually, at a minimum, it's 90 days, and that's with the most simple ones, essentially, okay? Many a times, I see them go 6 months, 9 months, up to a year and 3 months, to a year and 4 months is the kind of the general rule. Really, anywhere between 6 months to a year and 3 or 4 months is what you're looking at to deal with this. Okay, so and that's a pretty good gauge for you to really like take a look at. Now, does that mean that we have to do stuff every single month? No, it doesn't. But the IRS is going to want a lot of paperwork with this. They're going to want you to prove this with assets, bank accounts, mortgage statements, liabilities. They want to see what you owe against this. So it's not just a a small thing you're filing, you're going to have to get into proving all this. Okay, so there's where some of that time frame comes into it. Okay, so this is now turned into somewhat of a 15-minute video. These are pretty much the best generalities I can give you. Okay, the next step is to reach out and talk to me about what your situation is. Okay.